Thanks for joining us for the Member xCite presentation. The Member xCite presentation is informative, interesting to the audience, and showcases the strengths of the presenter as an entrepreneur and their area of expertise. It's not a sales pitch, it's a 10-minute educational and insightful exploration into what they do. And of course, it's exciting.
Ladies and gentlemen, please welcome our xCite presenter today, Joshua Lane from United Global Capital, to present to us on how to pay off your mortgage sooner than later. Joshua Lane is the Strategic Partnership Manager and Senior Financial Advisor at United Global Capital. Joshua is from the US, but calls Melbourne home. He has 2 children. He has a 5-year-old son and 2-year-old daughter that keeps him very busy outside of work. Ladies and gentlemen, please put your hands together for Joshua Lane.
So again, the title of the presentation is to how to pay off your mortgage sooner than later. And again, I'm Joshua and Trey as well. So just as a introduction quickly to us, and also just to make sure everyone understands, since we are professionals, we have to give you guys a general advice warning. The advice contained in this presentation is general only. It has been prepared without consideration or objectives to your financial situation and needs. You should not, you should consider the appropriateness of the advice by taking into consideration your objectives, financial situation, and needs before acting on the advice. UGC and Highland Lending does not offer any information in this presentation as a substitute for financial advice. Thank you very much. And what we will be learning today, can everybody see my screen? Because I'm seeing 2 different things. Okay, great. Okay. Great. So you'll learn about us and some tips on mortgage repayments. So I am Joshua Lane. I've been an advisor for 10 years. I'm a senior financial advisor and strategic partnership manager here at UGC, and I help everyday individuals manage their money and start investing. And Trey, I'll let you introduce yourself.
Thank you, Josh. G'day, guys. Trey Chalmer here, funding advisor and also director of Highline Lending. I've been in finance for more than 6 years. And as it says on the screen, we guide, should I say, everyday individuals into the right funding solutions based on their requirements.
Right. And with my time, I've been an advisor since about 2010. My advisory career started back in the US and the Vanguard, moved to Australia in 2013, decided to stay, then became a freelance paraplanner, and now a senior advisor here at UGC. So my advice career has spent the last 10, 12 years, I would say. Trey?
Yeah, and over to my side, guys. So I started in sales and property management in real estate. Wasn't really a fit for myself. I was trying to work out sort of how to bridge the gap between sales and connecting the funding solutions to clients. So that got me into finance. Started off as a junior loan boutique sort of officer for about a year. Moved into head of operations a year later. After about 2 or 3 years of learning the ropes, got sick of doing things everyone else's way, and I created Highline Lending myself. And from 2020 to present, we're now in it's been 2.5 years now, and I've managed to build Highline and settle, next to over $100 million worth of loans.
And this is UGC Services. So we do have a few services. We won't go into detail. We always can have a one-to-one, learn more about that. But today we'll be speaking more about our debt strategies and how you actually can pay off your debt quicker. And everyone at UGC is offered a no obligation free initial chat. So it goes for an hour. You speak to one of our advisors. You actually understand where you are now, what your goals are, and how we actually can create a strategy to help you to achieve your goals quicker. And we plan for individuals, companies, self-managing funds as well. And we enjoy, we have a very huge collaborative spirit. So we love to collaborate with other businesses outside the finance industry, especially in wellness, to create podcasts, webinars, and workshops.
Okay, so just Highline Lending summed up a little bit, guys. Who we help, says it all on the screen, but let's just sum it down. Investors, generic mum and dad investors that have 1 or 2 properties. We also like working with sophisticated investors, so an array or a wide range of property in your portfolio. both residential and commercial. First home buyers, if you're new to the game, need guidance and structure, we will sort you out from start to finish and take all the jargon and complexity out of finance. Over number 4, guys, commercial development. Whoop, I think we skipped it there a bit.
Yeah.
Commercial development and small projects. Then on to all your business owners, business finance, expansion, cash flow lending, working capital, all the G's and jazz, and also SMSF lending as well. Okay, so why a brokerage? Guys, you've got a freedom of choice by working with a brokerage. So rather than trying to navigate yourself through the complex world of finance, you'll have a brokerage in your corner. That is very similar to working with 60 banks, however, with one point of contact. You've also got someone by your side. So we're not just here to be transactional based brokers or transactional based professionals. We want to see you grow long term. So we want to look at your short term goals, your long term goals, and work at what needs to be done to get you from A to B to Z without taking any side or pit stops. We also save you time. As mentioned earlier, we have settled in excess of over $100 million of loans. So we do know what the banks want to see, to avoid declines, and we also know what structures that they're after as well. Okay. Now, our process is very straightforward and simple. We start with a strategy session. This can be done remotely, can be on my Zoom, Teams, phone, all that type of stuff, or in our office. Then we'll do an assessment, get the team together, look at where you're at, where you need to be, what needs to be done to get your funding across the line. Step 3, we then start providing our recommendations. These are done through a variety of strategy reports. And this is also on the back end of negotiations and discussions with our panel of lenders. And step 4, once we know which way we are approaching, we then take care of all the application due diligence, put it all together and get it across the line all the way through to settlement for you.
Right, and the reason why we actually at UDC why we love to collaborate is because we understand that we're trying to create a holistic way of providing advice. So we understand that even as advisors, even as financial advisors, there's a list of other advisors who are needed to actually assist clients. So clients are always going to need mortgage brokers, always going to need accountants, always going to need real estate agents, always going to need lawyers. So we love to collaborate with them. And as the thing says, a doctor cares about your health, a financial advisor cares about your wealth. And that includes all financial advisors, including accountants and everyone else, because they're actually there. If we work together, we can work together to provide you that financial health and financial freedom. And so, as I was saying, so this is our main point today. So it's a lifetime mortgage debt. So just in brief, in 2018, there was a grant report that came out with a percentage of people between the age of 55 and 64 who were in retirement owned their home outright. And in 2015 and 16, the figures it's shown that it just had fallen to about 42% from the previous figures there between 1990 and 2015. So what that means is that about 60 to maybe that more people between the age of 60 and 70 are ending up with mortgage commitments after they're well retired. So our whole thing about this is actually helping people to understand that they can actually pay off their mortgage quicker, but by using a few different strategies. So, beginning of our title, won't really you guys can see that. So the first step is looking at your personal cash flow. So paying off a mortgage early can be done by creating a budget, spending according to the homeowner's budget, and tracking their spendings. I'll let Trey explain this because Trey, this is his first point of contact whenever he's speaking to a client, is that he needs to see if he can service the loan. And the first step is looking at the client's cash flow and their actual expenses. So I'll let Trey explain this.
Yeah, thanks, Josh. Guys, it's not too complex here. It's sort of getting back to the basics, but I guess as we go about our everyday lives and, we get consumed by business and family and all our personal affairs, we do forget about our spending. So it's easy to be spending in areas that we shouldn't be spending. And it's very important to create a budget to sort of track and break down, where your expenditure is going we can be cutting down on, or we should be spending more on in some areas. So I guess the first step to financial freedom or financial savviness is creating your budget. Now, if we go on through the slide, there is a variety of ways we can do this. You know, there's plenty of apps these days through your bank on the mobile apps where they actually give it to you for you. So it all live syncs with your spending and tells you, hey, this is where you're spending and this is what you should look out for. So guys, always look into your internet banking app, or you can contact us at Hyla Lending. We've developed some guides here for your perusal. So we've got a budget planner, we've got a first home buyer guide for anyone looking to get into the market, and also a homeowner guide for anyone that does own a property at the moment and looking at ways to fast track their debt repayments and creating financial freedom. So if anyone is interested in obtaining any of these freebies, please comment in the chat box, 1, 2, or 3 with a title, and I'll make sure to get that all sent out to you guys later on today. So some really good value there, guys. A lot of time and effort went into these guides, and I'm sure you'll all find some good value from them. But yeah, moving on. Okay, great. And back to just like I was mentioning earlier before, guys, take the initiative. I mean, it's easy for me to say it now over a presentation, but it really comes down to your initiative and how serious you are about your finances and your money. So take the action, log onto your app, have a look at where your spending is, cut it down and see where you can free up some surplus, or get in touch with myself. I'll send out a budget planner. We can also have a complimentary chat, over the phone and address any questions or see how we can cut down spending in unnecessary areas. And obviously, guys, where you can free up cash flow is where we can invest and get it to work towards you and for you, not against you. Okay, and back to adjusting the budget. So just reading off the screen here, a personal budget should be an editable document that can be adjusted as one's spending changes. Spending within a set budget allows and creates surplus cash flow that can be used to further pay off your mortgage. So again, we have touched base on that, guys, but very important. Again, it's easy to say, but it really does come down to your action and what you're going to do to get on top of your finance. Okay, so mortgage owners, you'll have a set minimum repayments that do have to be made on your mortgage, every week, fortnight, month, or whatever it is. By creating this budget and breaking down how much extra cash you can free up, every week, fortnight, or month, potentially think about putting that towards your home loan. It can be as little amounts such as $50, 100, 200, whatever it is. But the more that we can contribute on an infrequent or a frequent basis, the quicker the principal will reduce on your home loan, and you'll see results over time. So one thing we try to advise all our clients is if you do have some spare cash, contribute it towards the home loan. And as I'm going to mention a bit later on, there's ways to get that money back out if you do need to. But the more we can contribute, always the better. Okay, and essentially speaking to a mortgage broker or a finance broker, depending on who your professional is, there's a variety of things that we can do to help create that financial freedom for you and give you tips and strategies on getting ahead of your finances. So some of the simple things we do is obviously we'll look at packaging and looking into a health review of your current portfolio. So having access to all the banks, we know what rates are on offer, we know what structure works, and we know what structure don't work. And it comes down to looking at your long-term goals to your short-term goals and putting a plan in place to switch banks or create new funding facilities to work for you to achieve those goals. Some things we look at as number 2 here is we can also look at different structure options, such as setting up a portion of your home loan to be variable, which moves with the market. In the current market, you get a lower rate on variable too. And then we can look at fixing the rest too. So, you've got a certain fixed interest repayment, for the next 2-3 years, whatever it is. There's pros and cons there, which we can discuss during consultations, but very effective and strategic things to think about there, variable and fixed. Number 3, using the offset account and accessing your equity in your home loan. Guys, these are very simple things that people do not do, okay? And the whole point of this presentation today is to make you aware of what your offset account is and how you can access your equity. But essentially, just to sum it up, an offset account is an external account that you can link to your home loan. Any savings that you have, your salary, any surplus funds pretty much just align around, you want to be putting in your offset account, okay? The way it works is every day the interest is calculated on how much money is in the offset account. So let's say you have a mortgage of $500,000 and we leave $100,000 in your offset account. You're only paying interest on $400,000 as the $100,000 is offset against the balance. So it literally just deducts against itself. Now, there's a bit of a misconception on where the savings come from. So all the interest that you save from the offset account actually gets contributed towards your principal. So what you owe on the home loan, which allows you to pay it off quicker. So very, very effective tools there, okay? And number 4, guys, obviously we work with you over the long term as brokers. We keep in touch. We do reviews. At Highland, we do 1 month review, 6 months, 12 months, and 2 years reviews to make sure that you're always in a suitable funding structure. Now, I'm sure we've all heard from the media. You know, they're sending everyone crazy and making it to appear a lot worse than what it is. The interest rates are increasing and we're going to go through another recession, all this crap. Guys, it's not as bad as what the media portray it to be, as always. Yes, interest rates are increasing, but we haven't had a rate increase for the past 10 years. So obviously with things such as rising inflation and out of control property prices, these rate increases are in place to protect our economy and to keep the engine turning. So should you be worried about the rates? Guys, no, okay? So prior to rates increasing and when we're talking pre-COVID levels, back in about 2015 to 2016, interest rates, you know, were up at that sort of 4 to 6% range. What the banks did back then was when they assessed borrowing capacity for clients or for applicants, if your interest rate that you were applying for was 5%, for argument's sakes, they would add a buffer of 3%, okay, to make sure that if interest rate increases were to take place, such as now, you'd still be in an affordable position to service your loan. So that was guidelines set by governing bodies such as APRA and also ASIC. So those things have been in place for the past, you know, longer than 3-4 years prior to make sure that we wouldn't be in an economy strain once rates do go up. And then we'll hand over to Josh.
So now this is where we are trying to understand on what interest rates are and actually how to work with them. And this is actually debt recycling. So as we were saying, there are 2 types of debt. So there's good debt, there's bad debt, and there's good debt. So just simply put, bad debt is debt which you have in your home loan. So the actual what you owe in your home loan, that is actually bad debt. So anything in which you pull out of your home loan, so there is a way that as you speak to a mortgage broker, that you actually can release equity from the funds in which you've already paid off, and that actually, if you use that to invest, is good debt, and which actually will cause a tax deduction. So working with a mortgage broker and financial advisor can allow a homeowner to create a dynamic financial plan to pay off their homeowner quicker while saving tax and creating wealth in an investment account. And this is the way it works, just as simply put. So everyone has their home. The income it goes from the home into the offset. So it goes from the principal home, and then it goes down into the offset to decrease the actual line of credit. And then once you are decreasing your home loan here, and then redrawing to increase the line of credit, then you can invest those funds back into actual property or into an investment. And what that does is, because usually the home loan, as Trey has said right now, they're between 2 and 3%. If you have a return in any investment account that's anywhere between 8 to 10%, I would say, you do get extra return into your home loan, and also you'll decrease your home loan and increase your wealth at the same time. And you'll get a tax deduction by using these funds here as a debt. So just simply put, if you have any questions about the strategy, it's very simply put. It's literally just using your equity in your home loan to actually release and to invest in other things, and these things can be investments or properties as well. So here are my details, and here are Trey's details as well. And these are the people that we are looking to actually. Sorry, go ahead, Trey. So here are the people that we actually are looking to be connected with as well. So UGC looking to be connected to investment property advisors and property developers, commercial real estate agents and asset finance specialists, buyers advocates, and estate plan lawyers and family affairs lawyers, as well as commercial and residential real estate agents. And trades are property investors and property developers as well, business owners who are looking for funding, first-time homeowners who are mom and dad owners, accountants, financial advisors like myself, financial affair lawyers, and commercial and residential real estate agents as well. This is a quick quote for you guys. Thank you for your time. And it's from Warren Buffett. If you don't find a way to make money while you are asleep, you will work until you die, which no one wants. Thank you very much for your time.
Love it. Well done. Well done, guys. That was fantastic. Everybody, please, big round of applause for Josh and Trey. Maybe unshare your screens, guys, and then we can do a little bit of Q&A. Awesome. Well done. Great presentation. Very informative. Always lots of stuff happening when it comes to home loans and moving money around. Has anybody got any questions? We've got two experts in the room. Anybody got any financial or loan questions? No. I'm going to kick off, guys.
Question. I have
Sure.
a question.
Go for it, Rach.
When you're considering deposit for a first home, what are your thoughts on that?
I'll address this one, Josh. Thanks for your question, Rachel. There's so many ways to get into the market at the moment. So there's no deposit options where the government have just released an incentive. It's been around for a couple of years now, but they've released 25,000 spots starting from July 1st, where you can get into the market with a 5% deposit, okay, and no stamp duty as well. So it's a scheme that you do. It's called the FHLDS scheme. It's a scheme that you will have to apply for, being 25,000 spots, and then there's some income thresholds and things that they look at as well. So there's a 5% option there. If mum and dad own property and they're willing to provide a guarantor, you can also borrow 100%.
That's the dream, Trey. That's the dream. To leverage up someone else.
Well, if just in general, if they do own property, they can provide a guarantee, and it means you don't put any deposit down at all. Then there's 5% options, there's 10% options with Vave LMI. There is so many options. So it's just pretty much having a chat with myself and working out, what works, what doesn't, and what you're close to, so we can put a plan in place to get you there ASAP.
Cool.
Oh, fantastic.
Also, and you are a lawyer, correct?
Mm.
Yeah. So because you're a lawyer, there's also banks that provide extra funding just because of your profession as well. So they give you extra perks because you are a lawyer.
Special treatment, huh?
Yes.
I love it. Quick question, guys. If you haven't got an offset account linked to, whatever bank account you have, can you always add one in, or do you have to refinance everything to have an offset account initially?
Sorry, guys, had to cough there. Okay, no. So it depends on what structure you have with your current bank. So if they've set up with a product that is eligible to have an offset account, then yes, you can link it. But a lot of the base products don't have offset accounts. You get a cheaper rate, but without the offset. That's where you'd have to look at a refinance. Fixed products too, most of the time don't have offset accounts. So it's usually variable that do. We do have some lenders that offer offsets with fixed, but it's not common.
Gotcha. Fair enough. Okay. Well, interesting.